It's the quiet before the storm for Opendoor, and today I want to walk through exactly why this silent, holiday weekend stretch might end up being far more important than people think. It's Sunday. Markets have been closed. There's no new filing, no updated guidance, no breaking news, no dramatic shift in the fundamentals. On the surface, it looks like nothing is happening. But if you step back and actually look at the position Opendoor is in right now, the quiet itself becomes meaningful. Sometimes the strongest setups form when price action goes completely still and investors have no choice but to reflect on the underlying story. We've now had a couple of days of total silence from the market. No trading, no volatility, no intraday spikes or dips, nothing to distract or distort sentiment. This is a rare moment where everybody, bulls, bears, long-term holders, warrant watchers, and casual observers, has been left sitting with exactly what the company has already put on the table. And that creates a unique kind of pressure. It forces people to think about the bigger picture, not just the last candle on the chart. Opendoor finished last week with a bit of a fade during the reduced hour session, dipping from the early spike around $8 back into the sevens. Under normal circumstances, that would become the headline. Week close heading into the weekend. Profit-taking. Uncertain momentum. But because the markets immediately shut down for Thanksgiving, something different happened. Instead of traders reacting emotionally and pushing the price around, everyone has been locked into thinking mode. And while nothing new has officially dropped, a lot of the recent developments haven't even begun to be fully processed by the market. Kaz's recent statements about acquisitions tracking within 6% of the high plan. The confirmation of transparency and accountability. The continued rollout of Opendoor's AI-driven home assessment tools. The hackathon projects that saved thousands of hours of operational work. The new growth scoring system that Kaz described as genuinely quite good. All of those developments are still fresh. They didn't disappear just because the market went on holiday. They've simply been sitting there, suspended in mid-air, waiting for the next open. And that's the idea I want to explore. The warrant play is still alive, the leadership story is still developing, and the operational discipline behind the scenes is still building. None of these storylines were resolved before the break. They're still active, still evolving, still gathering attention. And now investors have had 2 days with no noise to distract them from thinking about what comes next. This is one of the reasons long weekends can create powerful setups. With no price action, narrative becomes the dominant force. People start talking online. They revisit charts. They skim old earnings calls. They think about longer-term positions. They step away from the noise and recalibrate their expectations. And that recalibration can turn into action the moment the bell rings. Let's talk first about the warrants, because they are still a major part of the investor psychology here. The 3 warrant series, K, A, and Z, are now visible in most major brokerage accounts. Shareholders have had time to see them, read about them, and consider what kind of optionality they offer. These warrants give investors potential upside without requiring immediate capital. They act as a long-term bet on execution. And for a company going through a leadership transformation, that kind of optionality can become a powerful catalyst. Even during this quiet weekend, people have been discussing the warrants online, trying to figure out how they fit into the broader picture. The debate ranges from dilution concerns to potential short squeeze mechanics to longer-term exercises if Opendoor begins to execute its turnaround successfully. And because this discussion has been happening in the absence of price action, it has taken on a life of its own. People are thinking about structure, not noise. They're thinking about fundamentals, not candles. But the warrant story is only one part of this quiet setup. The other part is the leadership tone emerging from Kaz. His comment about acquisitions tracking near the high plan was not casual. It was a signal. Acquisitions are the engine of Opendoor's entire business. When they're strong, revenue potential increases. When they're weak, everything slows down. Tracking near the high plan during a seasonally weak period is not normal. It reflects strong seller demand, improved pricing accuracy, and more disciplined operational execution. Kaz's emphasis on being held accountable is also a significant shift. Most CEOs avoid real-time transparency. They wait for quarterly earnings. They hide behind controlled messaging. Kaz is doing something different. He's showing his work in real time. That creates a sense of trust, whether people like him or disagree with him. Investors don't have to guess what's happening. The numbers are being shared. And from an investor psychology standpoint, That matters far more than people admit. Now combine that leadership tone with the company's recent operational improvements, the AI valuation updates, the new repair assessment tools, the efficiency gains from the company-wide hackathon, and the improved growth scoring tools. These improvements are the kind of things that compound quietly. They don't show up overnight. They show up in the data over weeks and months. They show up in reduced holding times. They show up in better acquisition margins. They show up in improved resale efficiency. And while none of that is priced in during a holiday weekend, it's sitting there, waiting for markets to digest it. Then there's the macro backdrop. Mortgage rates have been volatile, housing demand has been soft, and transaction volumes have been under pressure. But Opendoor has adapted. The company isn't trying to outrun the market anymore. It's trying to work with it. And that matters because markets reward discipline, not desperation. Investors who follow housing cycles know that slow periods can set the stage for future acceleration. If Opendoor is indeed tracking near its high plan for acquisitions, and if those acquisitions continue into the new year, the early part of 2025 could look very different from the back half of 2024. And that's the kind of storyline investors spend weekends thinking about. Now let's talk about price action, because price action always returns when markets reopen. Opendoor's failed push toward $8 on Friday might have left an impression. But because that session was reduced hours and thinly traded, it probably didn't reflect true conviction. What did matter was the number of times the stock tested that $8 ceiling. Markets remember levels, and $8 has now become a psychological barrier. If Opendoor gets traction again early next week, that level could come back into play quickly. The key point is that the quiet has not erased the momentum. It has only paused it. And momentum that pauses can often resume with more focus when the market comes back online. This brings us to the heart of the weekend narrative. The silence itself is creating intrigue. Investors are reassessing Opendoor's fundamentals through the lens of a leadership change, a new accountability structure, a more disciplined strategy, and a longer-term set of catalysts. They're noticing the warrant structure again. They're thinking about macro conditions. They're thinking about last week's price action. And they're thinking about whether Opendoor could be setting up for another attempt at breaking out of its recent range. This isn't noise. It's reflection. And reflection is often the precursor to decisive price movement. The truth is, this weekend hasn't changed the Opendoor story, it has highlighted it. Nothing has moved, but nothing has disappeared. Every catalyst is still in place. Every risk is still in place. Every argument, bullish or bearish, is still in place. And now the entire market has had time to think about it. When markets reopen, we'll get to see what all that thinking adds up to. Maybe it results in more accumulation. Maybe it results in hesitation. Maybe it results in another test of that $8 ceiling. But the point is that the story hasn't stopped. It's simply waiting for the next chapter. And that's why this weekend is so fascinating. It's a moment of stillness in the middle of a volatile narrative. It's the breath before the next move. It's the quiet before the storm.